Ladies and gentlemen, good day and welcome to Dhanvarsha Finvest Ltd Q4 FY21 earnings conference call hosted by Investec Capital Services. From the management team, we have Mr. Rohanjit Juneja, Joint Managing Director, Mr. Karan Desai, Joint Managing Director, Mr. Sanjay Kukreja, Chief Financial Officer, and Mr. Pinak Shah, Chief Technology Officer. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rohanjit Juneja. Thank you, and over to you, sir.
Thank you, Neerav. It has been an incredibly challenging year for the world at large. However, it's been aptly said that only in times of adversity do true leaders shine. Despite the dislocation from the global pandemic in the last 15 months, we at Dhanvarsha take pride in the substantial traction on the liability side of our balance sheet, having taken our net worth up 5x to 1.5 billion rupees and adding 11 lenders to our roster, which include the likes of HDFC, SBI, NABARD, Bank of India, Northern Arc, Central Bank of India, AK Capital, Mars Financial, CSB Bank, and 2 foreign lenders. Our loan portfolio is up 193% year over year to 1.05 billion, with our borrower count up by 1,662% to 7,100 borrowers from 403 borrowers in March 2020. The average ticket size of loans declined by 86% from 1.1 million to 0.15 million rupees. This shows the granular nature of our loan book and is truly demonstrative of our customer centricity in the micro, small, medium enterprise space. First, let us talk about quarterly results before moving on to other details. Earnings were 11.6 million rupees in the quarter, up 256% from 3.3 million a year ago. The company dispersed 405 million in fiscal 4Q, up from 203 million in December 2020 and 35.6 million in March 2020. Interest income was up 259% year over year to 47.8 million versus 13.3 million a year ago. Total revenues were up 85% year over year to 108 million versus 58.5 million in the year ago quarter. Interest expense on debt, CapEx and OpEx associated with building out our gold experiential centers and our digital platform for MSME and blue collar workers led to total expenses being up 89% year over year. Our credit rating was upgraded to BBB by Infomerics in March 2021. In April 2021, the company concluded a capital raise of 658 million rupees led by Aviator Emerging Market Fund. Our balance sheet is pristine and exceptionally liquid, with more than 1 billion of cash and liquid investments today that can be deployed into loan assets. Our debt to equity is only 0.5x, and we have an additional 675 million of unused debt capacity. We are pleased to announce that the company will soon be issuing its first listed covered bond backed by gold loans with an A rating from CARE. On the asset side, as you all know, Dhanvarsha focuses predominantly on daily cash flow generating businesses like chemists, general and convenience stores, cloth traders, etc. that remained open even during the lockdown and hence could continue servicing their loans on time. Our diversified product offering today includes business loans, gold loans, medical loans, and education loans. Disbursements on a quarter-over-quarter basis increased from 48.2 million in 1Q21 to 206 million in the second quarter, 221 million in the third quarter, and finally 405 million in the fourth quarter to close the year at an annual disbursement of 880 million versus 87.8 million in the preceding 12 months. We were able to do that because of our single-minded focus on the liability side of our balance sheet, collaborations with captive channel partners, many of whom provide the company a first loss default guarantee, and a robust collections platform. On the pertinent topic of risk and impact of COVID-19 on the portfolio, today, loans backed by gold as collateral are approximately 20% of the loan book. The percentage of loans to the essential goods segment, which comprises of health, wellness, technology, convenience and medical stores, food and drinks, is 41% of the portfolio. Loans backed by a first loss default guarantee are 17% of the loan book. With our relentless effort on collections, we have been able to report 100+% collection efficiency, including prepayment, part payments and foreclosures since Jan 2021. Happy to announce that in April and May as well, we have reported 100+% collection efficiency, including prepayments and foreclosures. Coming to asset quality, gross NPAs showed substantial improvement, declining to 2.95% versus 5.01% in the previous year. Net NPAs are down to 0.82% versus 2.58% last year. Our provision coverage is up to 72% from 48.7% in 2020. NPA accounts recovered and closed in the year were 22.8 million. It's noteworthy that in our gross NPA bucket of 30.8 million rupees, 23.3 million or 76% come from 8 legacy LAP loans originated between September 2017 and September 2018. Excluding these LAP loans, gross NPAs would have been 1.04%. We are happy to disclose that 2 of these 8 LAP NPA accounts have already been closed in April and May 2021 with over 95% recovery of principal and interest. We expect continued improvement in NPAs in the current fiscal as we collect on legacy loans that are part of the NPA bucket. With Dhanvarsha now being eligible for SARFAESI, we are confident of a quicker turnaround on some of these loans. As you know, the lending landscape is evolving rapidly as companies try newer ways to reach out to the last mile customer. We spent a substantial amount of time to increasingly digitize our systems and processes to ensure that our business volumes grow strongly and at the same time ensure safety of our team members. Some of the initiatives include the company is investing heavily in a soon-to-be launched omni-channel end-to-end digital lending platform for MSMEs and blue-collar workers, which will provide access to quick but affordable credit lines to these underbanked customers. This platform will also provide these less sophisticated customers an entire ecosystem for their credit health and financial wellness. We have launched Dhanvarsha.co, a digital lead sourcing platform, in order to acquire customers for gold, business loans, and personal loans completely digitally. Dhanvarsha.co has already started contributing to our monthly disbursement volumes. Our channel partners and co-origination associates can seamlessly log into their cases through our centralized underwriting team via the Dhanvarsha Channel Partner app on Android Play Store. For unsecured loans up to 50 million, we conduct video PDs backed by third-party agency FI and FCU checks on ground to underwrite our customers. Agreement execution, e-match, mandate setting is also now executed digitally, thereby improving our turnaround time significantly. Now, on our plans for the future. Post the September 2018 crisis, and even more so after the lockdowns resulting from COVID-19 in the last 15 months, 3 things have come to the forefront for most financial institutions: liquidity, capital efficiency, and collaborations. With an overcapitalized, extremely liquid, and capital-efficient balance sheet, coupled with our distribution and tech prowess, we are now at an inflection point where we will demonstrate rapid profit and loan growth, which will be driven by our focus predominantly in the state of Maharashtra in fiscal 2022 through the following channels. Number 1, the launch of our end-to-end digital embedded finance platform that would give blue-collar workers and MSMEs access to a bouquet of financial services products. The personalized experience through this platform will make it more engaging for customers to achieve credit health and financial wellness, along with being able to borrow, invest, pay, and grow, all in one app. The launch of Financial Inclusion Stores, which is a capex-light distribution channel where daily cash flow generating businesses, which include chemists, convenience stores, food and hardware stores, serve as business partners for our lending and white label products. These stores should make as much money distributing products as they make in their own business, thereby incentivizing them to muster substantial volume for us. In the last 5 weeks alone, we already have 98 financial inclusion stores in Dhanvarsha's ecosystem and are expecting to have more than 2,400 such stores by the end of March 2022. Number 3, experiential branch centers that serve as a distribution hub for loans and other white label products, predominantly in the state of Maharashtra. Today, we have 18 such centers, which we expect to go up to 90 by March 2022. These centers will not only offer Dhanvarsha products, but will also be enabled to offer products from other partners to enhance the value proposition for our customers and grow our off-balance sheet AUM, where Dhanvarsha doesn't put any capital to work. We have currently tied up with a large bank in southern India for the LAP product, where Dhanvarsha serves as a sourcing, servicing, and collection partner without consuming any capital on its balance sheet. Number 4, direct collaboration with associations along with co-origination, co-lending, and first loss default guarantee from partners with deep expertise in technology and inherent sourcing strength in particular geographies. The first loss default guarantee provided to Dhanvarsha ranges from 10 to 100%. We are doing business with 7 such partners today and will be live with another 4 partners by the end of this month. At present, 17% of our loan book is backed by a first loss default guarantee, and we expect that to go up to 20 to 25% in the foreseeable future. Given all these efforts, we are confident of getting to 3.7 billion in on-balance sheet AUM with about 25,000 customers by March 2022 and 11 to 12 billion in AUM with almost 100,000 customers by March 2023. In fiscal 22, our predominant focus will be in the state of Maharashtra, where we have done business successfully for 4 years. Post that, we look to replicate the success in other neighboring states. Lastly, on governance, our board today comprises of 8 members, of which 5 are independent directors. We are pleased to announce that subject to customary regulatory approvals, the company has proposed to add a globally renowned investor, Mr. Porter Collins, to the board of directors at Dhanvarsha very soon. Mr. Collins was previously a partner and co-founder of a financial services fund in the US, which was featured in the book and the movie The Big Short for their financial acumen in accurately predicting the global crisis of 2007-2008. With this, we'll end our prepared remarks and open the floor for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. The first question is from the line of Amit Kapoor from Centrum Broking Limited. Please go ahead.
Yeah, hi. Thanks a lot for taking my question. First of all, congratulations for a great set of numbers. I just want to check that now that you have raised this capital and you're pretty, the leverage is pretty low for the business right now. But at the same time, you are growing at a fast pace. So what do you think? How long will this capital last, or when would you need to raise the next capital? If you can throw some light on it, if you have a plan as to will it be 3 years down the line, 4 years down the line?
Thank you, Amit. So while we have an overcapitalized and a liquid balance sheet, but the pace of our disbursement growth has picked up as well. So progressively over every quarter of last year, we have picked up disbursement by almost 50%. Our goal is that this year will be a substantial disbursement volume year for us. There is no plan at present to raise equity at this point in time, but the company will look at certain institutions which come along the way to provide capital to partner with us in our journey, especially in the MSME and blue-collar workforce space.
Okay, thanks, sir. I have another question. I just want to check, so what has been your experience with this second lockdown? I know that you guys have really managed it well in the first lockdown, but is the second lockdown, this second wave, creating any havoc for you guys, or your experience is different from what the first wave was, or if you can throw some light as to what you're seeing on the ground, especially in April and May, because I believe that those were really tough times from a business point of view for people, especially MSMEs and SMEs.
Sure. So the experience is definitely different from last year. Last year you had the RBI come out and announce a moratorium. This year that wasn't so. What has really helped us is in the last 1 year, the majority of our disbursements have come in the gold loan product and in loans that are backed by an FLDG. Number 3, the predominant disbursement for us in business loans has been in the essential goods segment, which are daily cash flow generating businesses. So they are convenience stores, they are chemists, they are hardware stores. Most of them were open during the lockdown, due to which servicing was not an issue. We have reported 100+% collection efficiency, including foreclosures and repayments, since we have tried to balance transfer a lot of the LAP loans out of our portfolio. In addition to that, there's been a good amount of churn in gold loans. So a lot of those customers have come, repaid the loans and taken back the gold. Therefore, the experience this year for us actually has not been as bad as last year. Last year, at one point in time, we had almost 24% of the book in moratorium. This year, none of that is applicable to us.
Okay, thanks, sir. That was very helpful. Thanks. That's all from my side.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Vishal Gupta from Bernera International. Please go ahead.
Hi, good afternoon. Guys, I have a question on your gold loan strategy. I see you have a 21% yield and a pretty meaty spread on it as well. Can you tell me more about how you're going to scale this up and how you plan to compete against the likes of Muthoot and Manappuram?
Right. Hi. Thank you for the question, Vishal. This is Karan Desai here. So we want to try and do the gold loan slightly differently to what some of our larger peers like the Muthoot and Manappurams have done. In the GL business, especially if you will see historically, very little focus has been paid to customer service and experience. That is what we are trying to change with the way our centers are set up and the kind of products and services we provide. So if you see any Dhanvarsha gold loan experiential center, it looks like a privileged banking setup which you would see in an IndusInd or an HDFC or one of the other larger banks. This is because we want to make the customer feel extremely privileged. The loan is provided in 30 minutes of time. The entire process from start to end, while it is a semi-digital process today, still gets done very, very quickly. And apart from the core gold loan product, we are also providing all of these customers other value-added services, including access to personal loans, business loans, insurance, and in due course, we will also be launching investment products for them. So keeping this holistic solution in mind, we see a great retention amongst our customer base. And even the closures that we have on a monthly basis, a lot of these customers are guys who come, pay, give us more gold and then take a top up. So from that standpoint, this is what we will make our niche, and we feel that it will become a very strong competitive advantage in the times to come.
Right. And are you planning other geographies apart? I understand you guys are concentrated in Maharashtra right now, but on the gold loan segment, are you looking at other geographies?
Right. So today our gold loan business is spread across two locations principally. One is of course the state of Maharashtra, and we have a network in the NCR region as well. Having said that, for this financial year, we have taken a conscious decision to grow our book largely in Maharashtra, to some extent in Goa, and just consolidate our position in the NCR region. By the time we hit 60-70 plus units by the end of this financial year, that is when we will be taking stock of which are the markets which are ancillary to where we are already present make sense for us, and then replicate our strategy in those markets as well. We want to become masters of one state at least, which is of course our home market of Maharashtra, before venturing into other markets like Gujarat, Rajasthan, so on and so forth.
Right. Got it. Thanks.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Ankit Garodia from VC Investments. Please go ahead.
Hi, I'm newly tracking the company, so pardon me for some of the premature questions. Just wanted to get a handle on, your strategy that you mentioned for 22-23. How are we going to get to, that kind of an ambitious AUM? That's my first piece, and my second piece is, we're trying to do gold loans, MSME, and various such verticals. Do you think we're spreading ourselves too thin on that count?
So thank you for the question. So firstly, on gold loans and MSME, the majority of our gold loans also are originated to business customers, with the security being provided to us as gold. Number two, on the other MSME loans that we do as well, a good chunk of them are backed by an FLDG product. At the present point in time, we have 16 branches in gold, and we have 98 financial inclusion stores. We feel we will get significant traction in the branches and the financial inclusion stores that will go live now. Obviously, April was a slower month for us given the lockdown, but things have since picked up from the middle of May. We believe every branch can do a disbursement volume of between 70 to 80 lakhs per month. So with that, we feel AUM of 370 crores is fairly achievable in the gold and MSME space. We will also be launching our end-to-end digital platform in the next 3 months, and that will add to the volume as well. Therefore, 3.7 billion we feel is fairly achievable in this fiscal year.
Understood. And on your turnaround time, typically what is the time to process a loan, and how strong are you even on the top-up loan?
So I'll break this down product by product. On the gold loan piece, door to door, the minute the customer walks in to when he walks out with the money, it is a turnaround time of about 30 minutes. In the next 2 quarters, this will also reduce substantially because we will be digitizing part of the onboarding journey, which the customer can complete from the comfort from his or her home, and then come to the branch simply to complete the valuation and the handover of the gold. So we aspire to bring this time for the gold loan product down to about 15 to 20 minutes by the end of this financial year. So that's on gold. The personal loan, the classic personal loan product that we do has an end-to-end TAT of about 48 to 72 hours from when the customer provides us all his documentation, up to about 5 lakhs of ticket size, which is irrespective of whether it's a personal loan or a business loan. We conduct the entire onboarding process digitally, including the video PD, KYC, etc. With the only offline fulfillment that happens essentially is the FI, which is the field investigation, and the fraud control unit, which is the FCU check done by our third-party vendors, which is typically triggered immediately post-approval of the loan. The business loan product typically takes a turnaround time of about 4 days end-to-end, for the simple reason that in these cases, typically post-approval or post-PD, there might be some questions which are raised by the credit team in terms of additional paperwork for GST, income tax returns, etc., which maybe takes a day for the customer to fulfill. So our average time now on the unsecured book is anywhere between 3 to 4 days. Gold loan is less than 30 minutes, and the LAP portfolio, which now we do in a BC, of course, being a LAP product with legal valuation, etc. involved, it is about a 2 to 3 week process. Broken down product by product.
Understood. Thank you. That's it from my end for now. I'll come back in the queue.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and one to ask a question. Anyone who wishes to ask a question may press star and one. The next question is from the line of Ankit Kuradia from VC Investments. Please go ahead.
Yeah, hi. So just to kind of continue, do we look at any inorganic acquisition given we're sitting on cash, or are we going to become sourcing like DSA agents for maybe some of the bigger banks or bigger NBFCs?
Certainly, there are always a lot of opportunities we look at from time to time. But the first priority is to look to do the business organically, deal over in-house. But if there's something opportunistic that comes along the way that is very synergistic to our business, it's certainly something we will evaluate.
And, on growing the loan book through, in terms of collaboration with maybe the bigger NBFCs or with banks,
yes,
is that
certainly
also a viable business model? Yeah.
Yes, certainly. So we are doing business with one large bank today where we are sourcing, servicing, and collecting on the loans for them. That is an area of focus for us. So we will be doing it predominantly in the LAP and the affordable housing product.
And how does the economics work there?
So usually they pay us a hurdle rate on the loan, and they pay us a servicing fee and a collection fee on every loan that we underwrite for them. We do provide them a small FLDG for those loans, and the capital is entirely provided by them.
Understood. And, just a vehicle and personal vehicle or, sort of commercial vehicle financing is not something that we want to do. I mean, at a lower ticket size. I mean,
we are very focused. We are very focused on the gold loan product, predominantly to business customers, on the pure play business loan product, which is our bread and butter, and the personal loan product. So we're focused on our target subsegment. Obviously, the idea is to offer them different products, but in a very concise and cohesive manner.
Yeah. So on a personal loan, a two-wheeler or something will not be part of the portfolio in the foreseeable future.
No. We feel the market within gold and business loans and personal loans in itself is very large. There is no reason for us to dilute our focus and to go into other segments. These three alone can be a very big portfolio for us in the next 4 to 5 years.
Understood. Yeah. Thank you so much.
Thank you.
Thank you. Participants, you may press star and one to ask a question. Ladies and gentlemen, you may press star and one to ask a question. Anyone who wishes to ask a question may press star and one. The next question is from the line of Nidesh from Investec. Please go ahead.
Thanks for the opportunity. So you shared a very ambitious plan of loan growth over next 2 to 3 years. Can you also give some details on the trajectory of ROA for the company over next 2 to 3 years?
Sure. We like to underwrite business with a 5% ROA threshold. That unfortunately was not achieved in the year fiscal 21 due to the investments we made into the business. So it's in the increasing headcount, the tech platform, the gold loan branches, and the experiential centers that we are putting up. Our goal is fiscal 22 and fiscal 23 should be a 5% ROA business for us.
So even in FY22, you should be able to reach 5% ROA? Is that?
We should be able to get to 5% ROA given we will get some economies of scale. In addition to that, it is also writing business with co-lending partners where we get a FLDG. So the cost of risk is covered and the cost of acquisition on those loans are very, very low. In addition to that, in the gold finance business, once a branch reaches break even, it becomes extremely profitable. So we will have that happening all through fiscal 22. We will get to a 5% ROA, and fiscal 23, our goal is to generate more than a 5% ROA.
Sure. Thanks, everyone.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Deepak Mehta, individual investor. Please go ahead.
Yes. Hi, good evening, sir. Thank you for taking my question and great set of numbers. So my question is around what is the average tenure of loan disbursed for us?
Thank you for the question. I'll again take it product by product. So starting with gold loans, which is of course the largest area of focus for us. On paper, these loans typically have a tenure of 12 months. But from our experience over the last 10 odd months, we've seen that these loans typically churn every 3 or 4 months because the gold loan product normally does not carry any exit fee or foreclosure charge. So as soon as the customer has some free liquidity available, they prefer to come and release their family gold. And they can come and repledge it whenever they want and avail money again in 30 minutes. So on the gold loan product, the tenor as of now is about 4 months on average. Talking about the business loan product, it is anywhere between 24 to 36 months. The average age right now on the book is about 30 odd months. The personal loan product is about 36 to 48 months. But as of now, the weighted average tenor on the book is at the shorter end of this curve, so it's at about 36 months. LAP, of course, it's our legacy book, which we are unwinding slowly on the balance sheet. So those loans were longer tenor, about 7 to 10 years now.
Okay, thank you for answering, sir. And second question is around, do you guys measure any kind of customer satisfaction such as NPS? How is the repetitive customer or cross-selling? If you can throw some light on this, sir.
Right. So today what we are doing is, once the sales team has actually closed the customer, we've disbursed the loan, and then subsequently when we are servicing the customer, we use our back-end call center team, which essentially reaches out to the client to check 2 or 3 things. One is, of course, how was the overall experience, at the time of booking the loan. Secondly, how likely would they be to recommend our products and services to anybody they may know? Because this is the easiest and cheapest way for us to acquire new customers, especially in the target segment that we operate. And last but not the least, considering that we have tie-ups with other financial product companies, including insurance, etc., we try and see whether they have a requirement for any other product which we could provide to them with convenience, considering that they've completed KYC and all other formalities while taking the loan from us. So yes, we do have a back-end team which takes care of this as far as customer onboarding and then subsequent customer satisfaction measurement is concerned.
So if it is available, can you share what was the last NPS score?
So now we don't have a scoring system. To answer you very specifically, we follow more of a process-oriented approach to ensure that these 3 or 4 points that I mentioned have been taken care of. We will be institutionalizing this in this financial year. As of now, it's more process-driven, but we don't have a score matrix per se.
Okay, thank you, sir. And my last question is around, so you have given very aggressive, target for FY23 and 22. So you guys going to maintain the same underwriting practices what right now we have, and we can expect same line of NIM, right? If we reach out to that level.
Yes, certainly. So the one thing that we would like to say is we've used the last 4 years to build a completely institutionalized and professionalized platform, which includes, professional management from various different backgrounds and completely independent board. With the quality of lenders that we have today and the equity capitalization that the company has gotten in the last year and a half, the idea is after the platform has been built now, we can be in takeoff mode where we can grow in a risk mitigated manner with channel partners who provide us a first loss default guarantee, with the backup of gold as collateral in terms of a product, and an omni-channel end-to-end digital platform where we again source business with partners who also give us an FLDG, which is a B2B2C model. Through those three mechanisms and the debt and equity capital that we have been able to garner, we feel the guidance that we've given is fairly achievable. Obviously, we would like to under promise and over deliver. So this is the minimum we would like to achieve in the next 2 years.
Okay. Thank you so much, sir, and my best wishes to all of you.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Jasmeet Chadda from Audible Link. Please go ahead.
Hey guys, individual investor, really pleased with your performance so far. So, great job. Question for you is, you're growing the size of your portfolio in the book and your loans in terms of your human capital, training new people coming on board. You're digitalizing a lot of the stuff for your customers, but what about your internal staff? You'll have training processes and mechanisms in place to make sure that everyone that you bring on board internally and externally, like your channel partners that you mentioned, do they know the Dhanvarsha way of doing things? Can you continue to scale same culture, same processes, same risk appetite, and same financials?
Right. Thank you for the question. I'll break this down piece by piece. So as far as training and onboarding any new channel partners or distributors for us is concerned, we have an in-house centralized training management team that essentially gives them a lot of guidance on each of the products that we distribute, the way they are structured, and what are the thresholds that need to be met before even logging a file into Dhanvarsha. Apart from that, at a business level as well. So when the sales team will onboard, say, a DSA, for example, they spend a lot of time walking them through the SOPs of each step of the loan process, be it a personal loan or a business loan, to ensure that on a monthly basis, I'd rather say on a daily basis, when loan files are being uploaded into our system, in all probability, they pass the filters and they go on to getting approved. Because the biggest killer in terms of sourcing is when you have channel partners who upload a lot of cases and you cannot disburse enough of them for the simple reason that they did not understand the product properly. So this is a core part of what we do. Apart from that, at a policy level, we have also ensured that all of our products have been properly documented. The deviation matrix internally for the credit and underwriting team is extremely clear, so that the system is geared up to process a volume of cases. Now, unlike a lot of our peers, we have adopted a centralized approach to underwriting to make sure that we control our risk, and the brainchild of our business is based at our headquarters in Mumbai. So it's essentially a hub and spoke model where in the branches where we source in remote locations, we have a credit manager who will actually go do the personal discussion with the customer at the time of onboarding him, but the underwriting of the file happens in Mumbai. So from that standpoint, we are fairly well organized with our systems, processes, documentation, and training and onboarding, because today, as we speak, we work with over 100 sourcing partners, which include DSA, small connectors, etc. We've already onboarded 90 plus financial inclusion stores in the last 40 days. And apart from that, we have 7 or 8 small partners with whom we do coordination in various shapes or forms. So to ensure that all of these work seamlessly on a daily basis, the systems and processes are critical, and we are fairly comfortable where we are right now.
Great. Fantastic. And again, great job on your performance so far. Last question. What percent of your portfolio today, or the new loans originating, are coming from channel partners versus your internal team?
Right. So if we were to break down our book today, out of the total AUM, about 17 to 18% comes from channel partners with whom we've done some form of co-origination or co-lending, wherein they would have provided us an FLDG or a first loss default guarantee to get us to contribute the capital to funding a customer. So that is about 18 to 20% of the book. Apart from that, in the gold loan business, it's a micro branch business. So the customer sourcing typically happens within a 2 to 5 kilometer radius of the branch, and the activation is done largely locally. So that's for the GL product. last but not the least, as far as the business loan and personal loan product is concerned, which we source from the DSA, that again, we work with 3 or 4 very large corporate sourcing partners to ensure that the quality of the cases we get is good. And then we have some small connectors, etc., that we activate as well. So to give you a broad split, the book is about 18 to 20% co-lending, co-origination today. About 23% is gold loans, and the balance will be acquired through the various channel partners, which are DSA connectors. And now as we move forward, of course, the franchise stores as well. This is a marked change from about 2.5, 3 years ago, where about 80% plus of our book was DSA originated, which implied a much higher acquisition cost.
Wow. Thank you. Great job, guys.
Thank you.
Thank you very much.
Ladies and gentlemen, you may press star and 1 to ask a question. Participants, anyone who wishes to ask a question may press star and 1. Ladies and gentlemen, you may press star and 1 to ask a question. Participants, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Deepak Mehta, individual investor. Please go ahead. Deepak Mehta, may I request you to unmute your line from your side and go ahead with your question, please?
Yeah, sorry. So I wanted to ask that this digital platform has already been launched. If I have missed, I'm not sure.
Right. So we already have a legacy digital onboarding platform that we've been using for the last 1.5 years. So that is already deployed and in production. Having said that, we are working on a completely end-to-end digital lending platform, which will be cutting edge, driven by a business rule engine, which will rely entirely on data with very little human intervention to do small ticket loans to our very, very focused MSME and blue-collar customer base, which is, according to us, still highly underpenetrated and unbanked. Just to clarify, this will not be a classic payday product which will lend money at exorbitant rates of interest. We aim to make this money accessible to a much larger universe of customers at affordable rates. And apart from the lending platform, it will also have an embedded ecosystem to encourage customers to understand their financial position, credit health, etc. in a very simple sense, and guide them as to how they can improve on this going forward. So demystifying what is essentially a fairly complex, a credit report, for example, today. And then, of course, you have the entire wellness ecosystem of, a prepaid card on the system. It will be integrated with the rewards program. So we estimate that this will go live sometime in the month of August. Development is ongoing right now, and the development team is completely in-house. So we built this entire team over the last 10 odd months.
Yeah, I think you have one subsidiary, BFL Technologies, for this one, right?
Yes.
And
yes,
so
yes, we have a... Yes, sorry.
No, so this new platform will be available on both iOS and like for user Android?
Yes. Yes.
And so, yeah. So going ahead, if you say 2 to 5 years, how much, business you are expecting from this digital platform, or maybe you keep developing it and keep improving it? So what's the management and company plans?
So what we're guiding for right now doesn't include a big number from the end-to-end digital platform. What we have given out is largely from the gold, business loan, and the personal loan product, which is the existing channels that we do business from.
Okay, sir. So this will be, extra benefits, we can say, whatever we achieve through this new platform.
That's correct.
Okay. Thank you so much, sir. Have a great day.
Thank you. The next question is from the line of Alok Bhatija from UBS Securities. Please go ahead.
Hi. Thank you so much for taking my question, and congratulations again on a great set of numbers. If you all could, a couple of, questions from my side. If you all can, comment a little bit more about, granularly on your liability franchise and the, pipeline going forward, as you look to scale up your business. That would be, my first question. And the second, can you shed a little bit more light on, the structure of your board and governance and, anything on those lines?
Thank you, Alok. So on your first question on the liability franchise, despite the dislocation from the global pandemic in the last 15 months, we've achieved significant traction with lenders, be it the PSU banks, be it private banks or other financial institutions. I think it's fairly evident with having lenders like HDFC, SBI, Bank of India, Central Bank of India, and many others on our roster. The pipeline for us is fairly robust. We have 675 million of unused capacity on our balance sheet at this point in time. We have several other discussions underway as well with private and PSU banks to raise additional debt for the business given our disbursement trajectory. So the pipeline is fairly healthy, and we hope to convert most of these into loan growth in the next 12 months.
Got it.
Could you repeat your second question, please, Alok?
Yeah, Rohan, if you can, just throw a little bit more light on the structure of your board and governance. Not in too much detail, but any highlights that would help all of us on the call.
Sure. So from day one of doing business 4 years back, we were very clear on the governance mechanism, because to build a large and profitable institution in the future, you need to have the right governance mechanism in place. So at this point in time, we have 5 independent directors on the board. The chairperson of the board is completely independent. He's a former banker who was a CMD of a large bank from 2014 until 2017. Post his retirement, this is the second board that he joined. We have someone extremely senior from Visa Inc. in Singapore, who was the head of all cross-border sales and marketing for the Asia Pac region prior to his retirement in Visa. He spent 19 years at Visa, and prior to that, he was at Nestle and Procter & Gamble. He has joined our board in February 2019. We have 3 other independent directors who come from different backgrounds, which include taxation, business, financial regulation. We also now will be, post-customary approvals, we will be having Mr. Porter Collins, who joins our board as well, who's a globally renowned investor. With that, we only have 2 executive directors who are on the board, which are Karan Desai and myself, the 2 joint managing directors. So everything that we do is governed by the board. The strategy has been blessed by the board as well. And the idea is to create a long-term institution in the future, just like you have an HDFC or a Kotak.
Thank you so much for that. Very helpful. And again, congratulations for what you all have achieved through this very difficult period.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. Participants, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Alok Shah from Shah Securities. Please go ahead.
Yeah, thank you so much for taking my question.
On the digital platform that you gentlemen are doing, I was going through your previous transcripts, and in that it spoke about a few service providers who you have onboarded, for doing your KYC, etc., etc. So, question really is that the digital platform that you're making, you did say that it's in-house, but I just want to clarify that there is no service provider and all of these things that you're doing is all in-house, and all of the data that will be there would be proprietary to your company. Is that correct?
Right. Thank you for the question. Let me try and answer that for you. So essentially, the core of the system, which is going to be the business rule engine and the entire interface in terms of the coding and development of the platform, is being done in-house. However, there are certain integrations that we need to do, for example, with NSDL for PAN verification, with the Aadhaar agency for, again, KYC verification of the Aadhaar card. Those are the kind of providers with whom we tie up via API integration to make sure that the customer journey is seamless. Now, since most of the development is being done in-house, we will only reach out to those partners wherein they become an integral part of the journey from a customer onboarding perspective, with the heart of the platform being built by us completely by the in-house team. And then, of course, design, etc., is something that we may seek help from partners if we want to kind of change the experience and get a third-party perspective on it as well. Having said that, the entire data will be owned by us. It will be on our servers, and it will be completely protected by adequate data security measures. So I hope that answers your question. Happy to take any follow-ups.
No, done. Thank you so much. Thank you.
Thank you.
Thank you very much. Ladies and gentlemen, that was the last question for today. I will now hand the conference over to Mr. Rohanjit Juneja for closing comments.
Thank you, everyone. We look forward to talking to you in the next quarter. Have a good day.
Thank you very much. On behalf of Investec Capital Services India Private Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.